What is up, guys? It's Andy here. Welcome back to another episode of the Andy Kandola Show. So in today's video, I want to share with you guys the 5 best bank stocks that I like better than Wells Fargo. Additionally, I'm going to go ahead and run through my portfolio and share with you guys where my portfolio is at currently, and then we'll go ahead and go through the stock market as well and some of the things that happened in the stock market in the last week. The stock market's just been all over the place, and the last week it just hasn't been able to decide what it wants to do, if it's going to go up, if it's going to go down. So I'll go ahead and share that with you guys and what is going on in the market. Now, in regards to this portfolio, the portfolio is currently sitting at $37,178. Now, in the last day, the portfolio is about break even. It's up $9.80. If we look at the last week, in the last week, the portfolio is up $1,317, or a little over 3%. In the last month, the portfolio is up $1,880, or about 6%. In the last quarter, the portfolio is up $2,460, or about 13%. And then overall, all time is going to be roughly the same at $2,460, and it's up about 13%. Now, if you are new to my channel, my goal with this portfolio is to go ahead and build additional income. All the stocks that I trade in are dividend-based stocks, so every single stock does pay me out on a monthly or quarterly basis. Basically, the goal with this portfolio is to go ahead and build enough passive income so I will have additional income coming in so I can retire early, or basically just use these funds to go ahead and reinvest them to grow the portfolio. So if you want to keep up with all the latest stuff on the portfolio, make sure to subscribe to the channel down below. And honestly, guys, it'd be highly appreciated if you don't mind hitting that like button as well, as it really does help grow this channel, and YouTube seems to like videos that get more likes. Now, additionally, I'm going to go ahead and share with you guys some of the trades that I'm making in my portfolio today, as well as some of the dividends that I just got recently in this portfolio. Now, as far as the dividend goes, in the last couple of days since my last video, the dividends that I got is from Home Depot. I got a dividend for $5.90. I got another dividend from Lynn Company for 69 cents, and from Duke for $2.51. And I believe some of these other dividends I already discussed in my last video. Now, additionally, I am making some trades today, and I'll share with you guys the trades that I'm making right now. In total, I'm looking at making 15 trades, and let's just run through those real quick here as well. Now, here's how I'm separating these trades out by. I'm investing $50 in Realty Income Corporation. Additionally, I'm investing $70 in AT&T. And basically, with both of these stocks have a higher dividend, so I'm currently focused on investing in stocks that are still paying out a higher dividend before the market rebounds. And additionally, I went ahead and invested $200 into my overall portfolio. Now, if you are new to M1 Finance, I do have a link in the description if you do want to sign up. Just gotta plug that in real quick because you will get $10 if you're interested in signing up. But the nice thing with M1 Finance is that you can go ahead and build a portfolio, and within the portfolio you can have different pies, and then you can go ahead and invest in the whole portfolio, and what it will do is just reinvest it into the different pies, and it will actually break it down so it weighs in how much should be invested in each pie based on the percentages that you've set. So in this case, because I'm investing $200 in the portfolio, and based on the percentages that I've chosen to reinvest in these companies, it's going to go ahead and break it down and invest in all these different companies. So some of the additional companies that I'm investing in is going to be NextEra Energy, Waste Management, Verizon Communication, Union Pacific Corporation, the Southern Company, Duke Energy, PepsiCo, SJW, Ecolab, Costco, Comcast, Hormel Foods, and Coca-Cola. So a lot of these are in my consumer staples sector. Some of these, as far as the Southern Company, Duke Energy, and SJW, are in the utility sector. And then I have some communication in here as well. So that's basically where it's investing in right now. Now, if you do want to check out my full portfolio, I do have a link in my description as well for that. The goal here, guys, is to be fully transparent with my portfolio and basically take you guys on the journey to see how this portfolio is going to grow, and hopefully hopefully you guys get something out of this, and maybe there's some stocks in here that you're interested in that you can go ahead and add to your portfolio. So on a weekly basis, I do go ahead and upload videos and share with you guys my journey. Now additionally, because I've been asked by a couple people to go ahead and review their portfolio, if you do want to go ahead and send me over your portfolio and it's basically focused around dividends or whatever your strategy is, I will put a link down in the description where I'm basically looking at doing a series to go ahead and review different portfolios, give you guys my take on the different investments, and maybe there's some suggestions that I have, but it's a good way to go ahead and overall learn from each other. So look out for a new series that I'm planning to start on this channel very soon. Now next, I want to go ahead and run through what's going on in the market in the last week. Now in the last week, the market's kind of been steady. It's been going up a little bit. It's been climbing right back down. So in the last 5 days, the market hasn't really done much. It did jump in the beginning of the week a little bit, but since then it's just been pretty steady. As far as overall for the week, the market was up. Now here's some of the things that actually happened in the market. We did end up seeing a surge in jobless claims. Now jobless claims did rise to 1.5 million, and what was expected was 1.2 million. But because it wasn't a crazy increase, it really didn't affect the market on a downside. In general, I think this was already predicted in the market that we will see a higher number in jobless claims, but that was something and a report that did come out just in this last week here. Additionally, the virus is back. Now, as far as the virus goes, some of the states are actually being hit pretty hard with the virus, and basically some people are thinking that this is the second wave of this virus. Now, some of the states that were actually hit pretty hard was Texas, Arizona, and North Carolina. So a lot of the states, and I believe overall 24 states, actually increased as far as their surge goes in the second wave of this virus. So that's definitely making an impact as far as the overall stock market goes. And there was additional news that the virus was actually spreading more in Beijing, China, but the health professionals in China actually stated that they had the virus under control and that it wasn't spreading as much as it was actually anticipated to be. So because of that, the market actually did not go down much, and the market's currently right around 26,240 points. Okay, now let's go ahead and jump into the main part of this video, and I'm going to basically share with you guys the 5 best bank stocks that I personally like better than Wells Fargo. But before I do that, I just want to share with you guys the overall perspective and my perspective on basically the banking industry. Now, just to put this in context as well, I've previously worked in the banking industry. I no longer work in the banking industry, but I was in the banking industry for about 8 to 10 years, and I worked at some of the biggest banks out there, and I do have a little bit of insight as far as the different ways that banks do make money. But as far as the overall banking sector, it definitely got hit extremely hard due to this pandemic, because a lot of people were actually out of jobs as we know it, and they weren't able to afford their mortgages, or they weren't able to go ahead and make payments on some of their credit cards. So overall, the banking sector was getting hit due to that. Additionally, the federal government reduced the interest rates. So the federal government actually reduced the interest rate down to 0%, which in turn affects the banking industry because banks make money off of higher interest rates. So the higher the interest rate, the more revenue the bank is getting. So that definitely made an impact as well. Now, as far as some of the benefits of owning banking stocks and the longevity around bank stocks are actually one of the highest paying dividend stocks out there. So as far as the dividend portfolio goes, they do pay out a solid dividend. And over time, if we look at some of their historical data, bank stocks do rise at a pretty steady pace. So I do particularly like bank stocks, and additionally, banks do make money in many different ways. So as far as just looking at an overall bank, they do make money off of consumer banking. So anybody that's depositing money, when they reinvest those funds, they do make money off of commercial banking as well. So by lending out loans to different businesses or owning real estate. Additionally, they do make money off of wealth management as well. So starting a brokerage account with a bank, or having a 401k or an IRA. And then lastly, they do make money off of investment banking as well. So if a company wants to go public, if a company is trying to go ahead and gather additional cash, the banks do help out with that as well. So there's many different ways that banks do make money. And now just in the last week, and another announcement that came out was that mortgage applications are actually at its highest peak in the last 11 years. So this is extremely good for the banking industry as well. But now just jumping into my 5 favorite bank stocks that I like better than Wells Fargo. The first one is gonna be M&T Bank. Now, like I stated, I did previously work at M&T Bank. I know this bank basically inside and out. They are a very conservative bank, but because they're so conservative, they are actually a very safe dividend bank. And if we just look at their overall 3-year track record, this bank's stock price was actually right around that $150, and it actually went as high as about $180, and currently they're trading at right around $112. So this bank is a very consistent bank. They're extremely conservative, and honestly, because I worked there, I remember there was times when my friends that had over a 680 point credit score were not able to get mortgages with M&T Bank. Now, additionally, if we just look at their overall performance, in the last 1 year, they're down 33%. And then just year to date, they're down 35% roughly. And then in the last month, they're up 12%. So I do see this bank rebounding over time. Now, additionally, just so you guys know, and I don't know if I brought this up, but I have all of these stocks that I'm sharing with you guys in my portfolio. So I do believe in all of these companies that I am sharing. Now, additionally, with M&T Bank, they do pay out a dividend as well. Now, they've been paying out a dividend and had a dividend growth for the last 4 years, and their growth rate is around 8%, which is actually higher than average. So that's a pretty good growth rate. The payout ratio is 53% roughly here. Anything between the 40 to 60% payout ratio is a good payout ratio. And based on their current dividend yield of 3.98%, their annual payout per share is $4.40. So banks, if you compare this dividend to some of the other sectors, do have a higher dividend. And lastly, M&T Bank is actually one of the top 10 US banks. So it's a great way to go ahead and diversify in the banking sector with a more conservative bank that I like better than Wells Fargo. Now next, let's go ahead and jump into the second one on the list, which is going to be JP Morgan Chase. Now personally, JP Morgan Chase, I do have a little bit of experience with because I had a lot of friends that actually worked at JP Morgan Chase. And I can tell you guys, JP Morgan Chase is ahead of the curve when it comes down to technology. To open an account at JP Morgan Chase takes less than 5 minutes, as opposed to some of the other banks out there, which are still kind of old school, and it takes at least 20 minutes to a half an hour to get all the disclosures in place and basically get that account set up. So personally, I do really like JP Morgan Chase. Now with JP Morgan Chase, if we just look at their track record and let's just look at their last 3 years, this bank has actually been growing. And if we look, obviously because of this current pandemic, this bank went down as well, but they were reaching new prices as far as they were as high as $136, and at this point they're trading at right around $100. So this is another bank that I do believe is currently cheap, and I do see them climbing out of this pandemic, and I do see them starting to hit new highs as soon as we get out of this. So if we look at their last 1 year, in the last 1 year, the performance of this bank, they're actually down 10%. And if we just look at their year to date, they're down 29%. And if we just look at their last 1 month, they're actually up 10%. So this is another bank that I personally really like, and they do pay out some solid dividends, and they've had some solid dividend growth as well. So if we just look at their dividends, this bank is currently paying out a dividend of 3.64%, which equates to about $3.60 per their share price. And the payout ratio is a little bit higher currently. It's at 70%, but their 5-year growth rate as far as their dividend growth goes is 16%. That's extremely high, which means that this bank is growing and they're growing their dividends, so they're paying a lot more of their dividend to their shareholders. Now, here's another thing about JP Morgan Chase. They are the largest bank in the United States. So as far as investing in a company that's the industry leader in their space, that's JP Morgan Chase. Plus, if we just look at their dividend growth, JP Morgan Chase has been growing their dividends for the last 9 years. So overall, I do personally really like JP Morgan Chase. But now, just moving along to the third bank that I like better than Wells Fargo is gonna be Bank of America, and they are basically one of the three largest banks in the US. Now, Bank of America did take a huge hit during the 2008 financial crisis, but they've been rebounding extremely well. And if we just look at their overall chart here, as we can tell, during the 2008 market crash, 2009, this bank took a huge dive, but I can tell you guys since then, this bank has made all the right moves, and they were starting to go ahead and climb out of this, and they've been growing consistently. So if we just pull up their chart for the last 3 years, this bank was growing, and they were right around $34, $35 as far as their share price goes. And due to this pandemic, they did take a hit, and they're currently trading at around $25 per share. Now, Bank of America does have the largest footprint as far as retail branches. They actually have more retail branches than any other bank in the United States. Now, if we just look at their performance in the last 1 year, this bank is down about 10% in their price. Year to date, they're down about 28%. And if we just look at their last 1 month, they are up 10%. So this is another bank that I personally do like better than Wells Fargo, and it's a great way to diversify within the banking sector. Now, Bank of America does pay out a dividend as well. Their dividend is 2.88%. As far as the annual payout, it's 72 cents per share. Their payout ratio is good as well because they do have room to grow here, so it's 45%. But the nice thing that I really like about this bank is their growth rate and their dividend growth rate, which for the last 5 years is right around 40%. So this bank and their dividend is growing at an extremely high pace. So I do like that, because when you're investing in a stock that's growing at that type of growth rate, that's awesome. Plus, they've been growing their dividends for the last 4 years. Now, another reason why I like Bank of America as well is because Warren Buffett invests heavily in the financial sector, and with Bank of America, he actually has not sold any Bank of America stock, but in the last couple months, he did end up selling some JP Morgan stock. So to me, that actually tells me that he believes that Bank of America is turning around and they're making all the right decisions as far as their growth goes, and he does believe in their management. So I do like that because I follow Warren Buffett and I do like his overall strategy. So that as well makes me feel a little bit safer as far as where I see the potential for Bank of America down the road. But now let's go ahead and jump into the fourth stock on the list, and the fourth stock that I like better than Wells Fargo is gonna be Canadian Imperial Bank of Commerce, or CIBC. Now we are jumping across the border here, and this is actually one of the top 5 banks in Canada. So personally, here's why I like the Canadian banking sector. The Canadian banking sector is considered the strongest banking sector in the world. And basically the top 5 banks in Canada, when we took a hit in 2008 and the financial crisis happened in the United States, the Canadian bank stocks actually never got hit. They never had to get bailed out, and they were still consistently paying their dividends. Now, the best thing about Canadian stocks is they do pay out a very solid dividend, plus their dividend safety is a lot higher. So CIBC I do personally like better than Wells Fargo, and if we just look at their overall last 3 years, Canadian banks don't grow as much, but they consistently hold their value. But right now, because we got hit with this pandemic, I do believe that CIBC is a good buy. And if we just look at their chart for the last 3 years, CIBC was trading between $80 to $90 per share, and obviously it is down right now and trading at $69 per share. So I do believe this is a decent buy right now. Additionally, if we look at the performance of the stock in the last 1 year, they're down about 13%. Year to date, they're down 17%. And in the last month, they have been slowly climbing and they're up 17%. So not a bad stock to diversify in. Now, additionally, here's another nice thing that I really like about CIBC. As I indicated, their dividend yield is higher. It's almost double of some of the US banks like a Bank of America. Their dividend yield is 6.21%. Their annual payout is $4.28. Their payout ratio is 67%, and their 5-year growth is 3.58%. Plus their dividend growth rate, they've been growing for the last 4 years. They don't personally grow their dividends a lot, as we can tell from their dividend growth rate, but if the focus is to go ahead and build additional passive income, investing in a company that's very safe, that's paying out a dividend of 6%, is actually a great investment for a dividend passive income portfolio. And now guys, let's go ahead and jump into the fifth stock that I personally really like over Wells Fargo. Now we are going to stay across the border, and the fifth stock is going to be Toronto Dominion Bank, or TD Bank. Now personally, I really do like TD Bank as well. Yes, they are a Canadian bank, but they're also expanding within the US. TD does have a trading platform in the US, and that's becoming really popular at this point as well. Additionally, TD is starting to expand not just in the US, but worldwide. So I do like this company as far as their growth potential, because if we look at the top 5 banks, TD is making all the right moves. And if we just look overall at their performance and at their stock price, their stock has been consistently growing in price. And basically they were trading at right around $58, between $50 plus at one point, and now they're at $45. So this stock is actually starting to climb back a little bit quicker than some of the other stocks, but I do personally really like TD Bank. Now additionally, if we look at the overall performance for this stock, in the last 1 year they're actually down 21%, year to date they're down 19%, and just in the last month they are starting to climb and they're up 14% in their stock price. Now like I indicated, TD does also pay out a decent dividend as well, and their dividend is higher than some of the US banks, and their dividend yield is 4.98%. Now I'm not sure if I actually mentioned this or not, but with the Canadian banks and like a TD Bank, they've actually been paying their dividends for over the last 50 years. So when we look at their dividend growth, this just means that the dividend's been growing for the last 4 years. But if we look at their overall dividend history, and let me just show you guys that real quick here, they've been paying their dividend every single year. And if we just look at their overall all time, this bank has always been paying out a dividend. It's just that they might have not been growing their dividends for that long. So their dividend growth is different from how long they've been paying out their dividend. But as far as just going back to this, their annual payout is $2.26. The payout ratio is 61%, and overall in the 5-year growth area, their dividend has been growing by roughly 8%. So I do like TD Bank, and it is one of my favorite banks when it comes down to the Canadian banking sector. But guys, that's basically gonna be the 5 banks that I personally like better than Wells Fargo. Now I have nothing against Wells Fargo, and Wells Fargo is a great bank, but just overall with Wells Fargo, they've just had some bad management, and they're actually starting to rebound, and it looks like they might get out of it, but I don't personally believe in Wells Fargo, and that's not a company that I invest in myself. And these are the 5 stocks that I personally do like better than Wells Fargo. But hopefully you guys got something out of this video. If you did, if you don't mind smashing that like button, as it really does help, guys. And if you do want to get a couple free stocks, I do have some links in my description. Check it out if you like. If you're interested in M1 Finance, you can get a free $10 for signing up with them. If you want me to go ahead and review your portfolio, go ahead and email me down below. I do have my contacts there. But thank you again, guys. I will see you guys at the next one.